The world's second largest economy had a tough year.
China right now has an economy which is crumbling.
China's economy is in trouble.
Everyone gets the joke.
In the past 3 years, the combined Chinese stock market lost more than $6 trillion.
This is an economy that is in severe trouble. They need the U.S. market desperately right now.
On December 1st, this prominent economic professor, Liu Jipeng, advised people not to invest in the falling Chinese stock market. Now, all of Professor Liu's social media accounts are frozen.
Xi Jinping faces the worst economic environment in 40 years.
So we keep hearing the same story, that China's economy is crumbling. But is that really the truth, or just the version you're meant to believe? You've probably heard the phrase, follow the money, and you'll find the truth. Well, that's exactly what we did, and what we uncovered could flip the entire narrative on its head. Because this isn't just media spin, it might be the start of one of the biggest investment shifts the world has seen in years. And almost no one is paying attention. But before we go deeper, let's rewind for a second. If China is supposedly in free fall, then how do you explain this? World's first breakthroughs in tech, dominance in EVs, robotics, renewables, the #1 producer of rare earths and AI capabilities that are giving Silicon Valley a serious run for its money. Exterminate! Not bad for a country that's meant to be falling behind, right? Well, stick around, because we're just scratching the surface.
There's a new emerging threat to megacap's massive spending and America's dominance in the AI race.
DeepSeek. This is a new, free, open source AI model that beats the latest OpenAI and Meta models on key benchmarks, and it was made for a fraction of the cost. DeepSeek did something highly competitive in just 2 months with dumbed down GPUs for less than $6 million. And guys, let's not forget this fact, it comes from China, whom Sam Altman and others say poses the greatest competitive threat to the dominance of US-led AI.
All right, now it's time to show you the silver bullet, the money trail. Let's start with what some of America's biggest and most successful investors are actually saying about China. Now, these aren't nobodies. We're talking about heavyweights like Ray Dalio and Warren Buffett.
I'm very bullish on China. What we're seeing in China is we're seeing effective move toward the debt restructurings. There's a very impressive economic restructuring going on. There's the old industries, the state-owned enterprises in those old industries, and there's the development, the fast development of wonderful new industries, cutting edge that are fantastic. You know, when I went to China originally and started in 1984, I would bring a $10 calculator to them, and they thought that was like a miracle. And now I'm watching in terms of where they are in artificial intelligence and all of those things, and it's comparable to where we are. I think people misunderstand China because these problems exist. A lot of people thought were problems that are going to be terrible for China, but they don't understand essentially the engineering. They will have to change. The economy is no longer going to be the cheaply produced things, but that's okay because they'll have the capacity to do that.
The reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. I have nothing to add.
But it doesn't stop at words. It turns out these top fund managers aren't just talking up China, they're putting their money where their mouth is, and piling it into Chinese stocks at a pace that's turning heads. Take a look at this. Why US hedge fund moguls are suddenly bullish on China. 3 billionaire hedge fund managers going heavy into Chinese stocks. Why Wall Street's leading hedge funds are ramping up exposure to Chinese stocks. US hedge funds pile into China's JD.com. Goldman Sachs says US hedge funds are buying Chinese stocks at record pace. Now, hedge funds are piling into Chinese stocks like never before as sweeping stimulus sparks enthusiasm. So now the real question becomes, if China's economy is really falling apart, then why are the smartest investors in the world buying in? The obvious answer, somebody's not telling you the full story. Because when you dig a little deeper and start running the numbers, a very different picture begins to emerge. Now, I want to introduce Philip Tortevsky, our senior analyst, onto the show. How are you?
I'm good, and I mean, this is some eye-opening stuff. Obviously, we have heard a lot of things about China in the media, and hopefully now we're painting a bit of a picture in terms of what is happening. And I wanted to bring up the numbers themselves in terms of why and how this story starts to get even more intriguing. And the question asked is, why would big fund managers want to invest in China? That right now is what we're looking to answer. So if we go to the screen and have a look, one major reason when big fund managers, as you know, Dale, are looking to employ capital, they're always looking for value, looking for undervalued type opportunities.
Well, long-term value.
Absolutely. And if we go to some of the latest developments, we've got the Chinese stock market. Here is a calculus, or basically number of the Chinese stock market current PE ratio. It's sitting at 10.24%, and that's as of recent calculations. Now, the part I want you to scroll your eye over is a list of the top 10.
Wow.
Yeah, and you've just said it right there. If you're a fund manager, particularly in the US, as we've seen, it's not just talk, and the reason it's not just talk is because when you see China sitting down at the bottom, almost 10th or 12th in terms of PE ratio, that spells undervalued in a sector or an economy that is, leading the world in so many spots. This is why it is happening.
Well, we always know the stories. If something was the best performer last year, it's not going to be there in the next year. So you're going by the worst performer because the only way is up.
Yeah.
It really is. And it works with, if you look at managed funds, it's exactly that. The best performing managed funds in any 1 year are never there the next year because they've already got their growth. And you can't buy yesterday's returns. So this is saying to me, China's been on the nose for quite a while, but the bad news has already happened. Now's the time to get into it. That's what this is showing me.
Yeah, and there are some more numbers I want to cover off. So if we just go back to the screen now, this is another, chart showing Chinese equities are still trading at a discount to developed markets. And this is the music to the ears of when you're talking about big fund managers looking for that value. You can see how far under the Chinese stocks are trading in terms of discount relative to their counterparts, which is... Yeah, and that is where that opportunity is starting to shape. And I mean, it's not just opportunity and talk. When you're looking at a company, there's an undervalued aspect, and then there's the projection of future earnings. That is what's going to give that real boost to the share price moving forward. So that last article that I just brought up, if we can go back there on the screen, it shows that the Chinese firms, and this is from Reuters, saying that the best earnings growth happened in 7 years in 2024. So we've seen, since 2017, the best performance in terms of earning growth for Chinese stocks, companies.
Wow.
And you line all of this up, follow the money trail, and that's why money is pouring into the Chinese stock market.
Yeah, look, to me, it just makes sense. It really, really does make sense. Basically, if everybody wants it, it's already gone. At the moment, this is the opportunity, or the big opportunity for people. It's just working out how to invest. And I'm sure we're going to talk about that in a little while, how people can get access to the Chinese market no matter where they are in the world. But anyway, now it's always wise to confirm what we are seeing with the price action on a chart. So let's bring up a chart of the S&P 500 and also the SSEC Composite Index.
All right, so let's bring that up on your screen right now. Is the chart of the S&P index. Now, we all know the S&P, obviously, the leader in terms of world stock markets, is trading at all-time highs, has had fantastic growth over the last, since 2014. You can really see how the growth accelerated away. And we are still very bullish in terms of the nature of the S&P. But this is where the big end of town looks and says, okay, well, potentially what we're seeing right now on that chart, if we go back and have a look, we might be heading to that overstretched, maybe overvalued type discussion when we're talking about US companies. Obviously,
it's normal.
Yes, it is.
Normal.
Yeah, but at some point, there will be that realization, like we saw in 2000 with the tech companies, that when things become overvalued, money will move elsewhere.
It does, and it moves into what's about to move.
Yeah.
That's what we see all the time. And I know when you study there's a research out by Princeton University Press called Triumph of the Optimist, where they study major world markets, of which obviously the S&P 500 or US market is one of them. And that just shows you, the statistics show you that sometimes a market like the S&P will outperform, but then it comes back to the market and other markets will outperform because the big fund managers or the big players around the world are shifting money to get better value, as you were saying earlier. And to me, this is what I'm seeing, based on the metrics that you're showing us and all the statistics.
Yeah, and I mean, if we just go back to have a look at the S&P to round it up, obviously we've got this beautiful momentum line, and this is something we teach. Obviously, when we're talking about traders, from our perspective, this market is, I guess, a fantastic market if you are a trader, because traders aren't confined by the restrictions big fund managers are in terms of getting in and getting out. So whilst right now the S&P 500 is still a trader's market, and it's actually moving up, it's bounced from that recent low that we saw in terms of the April correction, showing really strong follow through in May. I believe we're probably going to take out the all-time high.
I think we will.
Yeah, we definitely will. But then the question is, if we move over to the SSEC, which is the Shanghai Composite Index, this is the part that gets intriguing. Because if we stick to the monthly chart right now, we can see the SSEC, from a technical perspective, has been range bound between 2.5 and 3,600 since 2015. We've not seen that expansive growth that we saw with the US market. And so that in itself lends that opportunity. I mean, if you just track back to Australia, 2020 to 2024, it was mirroring this kind of price action.
It was. Yeah.
And now we've seen the Australian market really take off in 2024, 2025. So in terms of future opportunity, what the big players are seeing is predominantly from that angle. They're looking at it thinking, okay, it's not run as hard as the US. There is potential now, even from a technical perspective, we've taken out that long-term momentum line. Once this market starts breaking 3.5, and this kind of pattern, a lot of our students or traders out there would understand, this is a bullish type unfolding. So if we break out through that 3,600, there is the opportunity that the SSC really goes for a big run. And that's what probably is playing into these latest developments. But also, since COVID, look how much the volume's picked up.
Look at it. Wow.
We've seen volume tremendously pick up in April, May, and that is probably part, in fact, to the flows that are coming into the market. So what are we saying? Well, basically, don't always listen to the news for first starters, but when you do your own research, when you're able to analyse charts, you're able to see it or dissect the picture like the big end of town. And that is where the big opportunities might come.
No, I have to agree with you. I mean, we are Wealth Within, and we've been teaching traders and investors for more than 2 decades. In fact, we taught over 30,000 traders and investors to trade any market anywhere in the world. It doesn't matter whether you're in the US, Europe, or Asia. We teach people in all of those areas of how to make more profits on the marketplace. Now, we're going to talk about techniques, etc., which you might like to get in this book. This is my latest book, Accelerate Your Wealth. It's available on Amazon. You can get it. It'll show you how to trade those US stocks. I do study the Dow top stocks that are the Dow stocks, and show you how to actually make more money off them quite simply. Now, if you want to see more major market predictions, check out our video, US-China trade deal, 10 ASX stocks to buy.